My name is Rick LeFaivre. I'm a partner at OVP Venture Partners up in the Seattle area. And this session has to do with venture capital. And it struck me, sitting here the last couple of days, I think I only heard the term venture capital mentioned once. And those of us in the venture business, of course, think that we are the center of the universe. And in fact, one of the themes of FiRe is that technology can play a role in the global economy, a big role. And we think that venture capital serves as an engine for at least the early stages of technology. So the panel today will be discussing what's going on in the venture world. To introduce things, I'm going to ask each person to introduce themselves and just say a word about their firm so we get a sense. These people have flown in just for this panel from around the world. They flew in from Australia and Zurich and Shanghai and the venture hotbed of Honolulu, where every VC aspires to do a deal.
We're always taking partners, if you want to.
So Roger, why don't you start with an intro?
Okay, my name's Roger Buckeridge. I've been in venture capital in Australia on and off since 1985, but most recently with my partner, a firm that was established in 1996. The Australian VC industry is about 15 years old. There are probably about 20 firms that have raised more than or managed more than 50 million. Nobody manages more than 400 million Australian. Today, I think the currency is going up, so multiply by 0.8 to get to US dollars. So we're an early stage investor. We just do startups, seed, first round, second round, and more, of course, we have to reserve money for later rounds. But every time there's a recession, and there is one about every 8 years, and we're just in, this is my third recession in my venture capital career.
Been through it.
Yeah, so I can talk more later.
Great. Niall?
Yeah, I'm Niall Davis. I work for aeris Capital. We're not a traditional VC as such, but we germinated, I would say, out of a typically VC company that was founded about 2000. We're actually a family office and work for one of the SAP founders. So we do a pretty wide range of investment phases. We don't sort of focus. And we sort of say direct investments. We don't say venture capital. I don't know why. It just seemed to have become a word that we use rather than venture, because venture seems to specify too much of a phase. Yeah, Switzerland is a pretty small market, so we focus on German-speaking Europe and what is North America, but we're willing to go further afield if we have local partners that we can work with. And it's always been our principal's belief that investments in companies and the companies themselves is where the value is, rather than in any type of financial products, which I think has been spectacularly proved in the last while. I think we're talking a little bit later about how VC is getting on, so I won't comment on that just now.
Okay, Mike?
Michael Pfeffer. I'm the managing partner of Kolohala Ventures in Hawaii, and we focus almost exclusively in Hawaii. We're sort of a small Australia, I guess. I've been investing in technology there since '99, but the venture industry really is only about 4 or 5 years old. I founded this firm 3 years ago, and it's only about $125 to $150 million a year that gets put into real tech deals in Hawaii. So much smaller than most markets, but we have been growing steadily for the last 6 years as a state, and really focus in 3 areas. Clean tech, renewable energy is really the leader there right now. We have a great little life science hub. That's really emerging as a strong area for us. And then sort of the Web 2.0 software. You guys have seen I Love Photos and Blue Mars, so avatar reality, so things like that. So those 3 sectors are really where Hawaii has an advantage and where we do business.
Thanks.
Hello, I'm Gary Rieschel. I've been doing this for close to 14 years. The first 9 years were in Silicon Valley. I ran the SoftBank group of investors in venture capital funds. And 4.5 years ago, moved to Shanghai. So turns out I've set up 4 venture funds in China, starting one in 1999, SoftBank China, 2001, SAFE, 2004, Cheyuan, and then in 2005, put some partners together to form what is now Qiming Ventures. And so we have about $500 million. We do primarily early stage investing. 1/3 of what we do is in healthcare. About 50% is in IT related, everything from semiconductors, internet, Web 2.0, et cetera. And then 15% just random things that we happen to like. So that's the intro.
Okay, so let me kind of set up the discussion here. When it seems like every time I see someone I haven't seen for a while outside the venture business, they ask me, how are things in venture? It's almost like asking about my sick aunt. And so we have a discussion about what's going on in the venture world, et cetera, which I'll let these guys talk about. But a couple of facts. In Q1 this year, we had the lowest investment level in 12 years in the venture capital, so going back to 1997. You can talk about the bubble and what happened during that 98, 99, 2000 timeframe, but let's forget about that. That was an anomaly. It never happened. But if you even go back to 2004, after the bubble, there were 94 IPOs out of the venture world in 2004. There were 57 in 2006. Last year, 2008, there were 6. Now, I understand there were 2 this week, so maybe things are looking up. I think everything's fine now.
Recession's over, back to business.
There's a statistic that the National Venture Capital Association put out that only 15% of venture funds have actually made money since 2001. So 85% of venture funds have not actually created any carry. It's ironic, by the way, that the government wants to start taxing our carry because we don't get any, so what the heck? So I guess the question is, to start with, is what's going on? Is this just a cyclical industry that's kind of going up and down, and we're in a down period, it's going to come back? Are there some fundamental endemic problems with the venture capital world? Is it a global industry, or are there regional differences that you're seeing out of the different regions, since this is a global panel? So I'd just like to throw that open as kind of a general topic and ask each of you to give us your perspective on what you're seeing in your region and what you think about kind of the state of the venture capital industry and where we're headed. So Roger, why don't we start with you?
Okay, well, it's kind of paradoxical because I don't think that there's ever been a more propitious time to make venture capital early stage investments in Australia than today, and I'm looking sort of like on a 20-year horizon. But it's a time when capital formation has shrunk to zero in terms of the domestic institutional support for continuing to refresh funds. The rate of funding of venture, I think, it's a small, young industry, started essentially in the mid-90s, so you've still got the first generation of managers trying to demonstrate the full cycle and to get the distributions out. My take is that first generation of managers, the biggest sort of half dozen of them, have all returned 1 to 1.5x on the funds they raised, typically in 98 and 2000. So they didn't get out in the tech bubble. They started just before it. That's respectable against the kind of MVCA stats you see from the States, but it doesn't prove that it's a viable asset class or investment grade to the institutional investors who can get access to the global VC market through fund of funds, and all of them have listened to the asset consultants, Cambridge Associates and others, and that's where they put their money. So I think there is a bit of a crisis now in terms of who's going to fund it, but at the same time, the platforms have been put into place. The integration to the Asian common market, all those remarks that were made in the earlier session, I totally agree with. That's the future for Australia. Good people flows, good education exports, all those right settings in terms of the environment make me very optimistic for the next 20 years.
That's good. I'm feeling better. Niall, you're an Irishman living in Zurich. What's happening in Europe?
Well, okay. I think while you mentioned that the tech bubble is something we shouldn't really take as a benchmark for anything, it was sort of crazy times. It set a lot of expectations at that stage, and people still haven't recovered from that. On the other hand, I think today, and I think everybody will agree that the valuations are pretty good, so it's like, a good time. I think I concur for making investments. But the funding is, of course, dried up for many people. We're in the lucky position that we can invest, but we find we have a dearth of co-investors, particularly in Europe. And what we've been seeing in Europe is that you have a lot of traditionally US-focused VCs that would never have made investments abroad. They've been actually coming to Europe and looking for companies specifically there. if you have a statistic, I think at the high point of the venture industry in Europe, there was about 260 investing companies in Germany, and it went down to something like about 10 active now currently, so it's not very many at all. I think with regard to sort of the exits, and it depends on what type of venture you're doing, if you're doing tech or if you're doing med tech, or, you know, sort of, you have to differentiate very much. I would say on the IT side, you're not seeing very many IPOs or things like that because we're in sort of a cyclical phase. Most of, say, okay, early 90s, 2000, you had all the enterprise topics that had pretty much been done. Then you got a lot of the Web 2.0 type of things that came after that. And now we're seeing a lot, not really in IT, but things in mobile, which is an area like that is, if you want to say it's hot, so probably the valuations are too high. But I think exits will come back. We're seeing, and we ourselves are seeing a very high number of inquiries in the exit area at the moment. So there's a high exit activity there at the moment, higher than we've seen in the past. So I'm hopeful that in the future it'll come back. I doubt it'll be so many IPOs, just because of the feature of the capital market, but I don't, in a sense, or in essence, I don't think that has to do with the venture market itself. I think that's much more global, and the venture model itself, as opposed to the mail that I got beforehand, I don't think it's completely broken. I just think it needs to be played differently. Yeah. So maybe if you do investments in early stage, you do it really small and very early, or you decide to take significant funds into your hand and you say, we're going to make a big splash, but not traditional venture, at least not in IT, and that's where I can speak for. I can't really speak for the other sectors because I don't know very much about them.
I suddenly realized that we do a very strange thing. We invest in very early stage investments in two of the three sectors I talked about. You asked, is it broken, is it fixed, what's going on? Life sciences and what we're finding with renewable energy is they have a much longer liquidity cycle than at least the last incarnation in sort of the Web 1.0 internet cycle. So instead of 3 to 5 to 7 years, it's 5 to 7 to 8 to 10 to 12 years, and a lot more money. So, I think that I would argue perhaps it's never been broken, it's never been fixed. Venture capital is a weird, crazy market to be in, and it always has ups and downs and bubbles and bursts. I think this is what we're experiencing now is similar to what we saw with the dot-com crash, but writ large. So, as you mentioned, the first quarter we've seen 45% declines in venture investing across the board. Clean tech was down 80-something% when everything dried up in the fourth quarter of 08, and the first quarter we're starting to see that free up. What I see as an opportunity right now, Roger mentioned it, there's never a better time. If you have money or if you're raising money, and you can raise money, which is the difficult part right now, but if you've got a fund and you've got funds in place, valuations are beaten down, you can go look for the best of breed opportunities in companies that haven't been able to get funding, that got caught short, and pick up some great technology at very reasonable prices. And I think Hawaii is a good canary in the coal mine sort of example. After the dot-com meltdown, Hawaii got into technology. They put in a very progressive tax credit incentive program with R&D credits, actually cash for companies, tax credits for investors, bringing mainland money and Hawaii money together. That really built our industry over the last 6 years. And it started right after the meltdown. It was 2002, right? And people then were saying, you guys are crazy. Why are you getting into this? Well, now's the time to get into it. I think the same thing is true today. Everything's just gotten beaten to hell. And if you can find those opportunities and help those companies along, I think there'll be some real opportunities. That said, everyone I know in the industry and ourselves, last year, we made 11 investments, and only one of those was a truly new startup investment. 10 were follow-on in our existing portfolio. And that's been pretty true across the board, I think, for the last 6 or 8 months. So there's been a period of pain where almost, if you've got a great new idea, it's very difficult to get funding. If you have a great idea and you've gotten some funding and your sugar daddy still has money, you've got a chance to keep going. But I think globally we're going to see there'll be a hole for a little while. And you're going to see there were no startups in 2008, 2009, or much fewer than you would normally have. And therefore, there's going to be a gap for that funding in a couple of years, that Series B funding. So there'll be an opportunity for other companies to step in. So it's just trying to understand those parameters and look globally at what the opportunities are and what the competition is and find the right sectors.
Yep. So Gary, you've invested a lot both in the U.S. and now in China. What are you seeing and differences perhaps? Or?
I think the venture capital model has ended as we know it. I hate to be so, actually I don't hate it. It's actually being fairly practical about it. The issue is that venture is now a global industry. So all the major brands, the Kleiners, the Sequoias, NEAs, have funds in multiple countries. You have VCs, very smart people in India, you have them in Russia, you have them in Japan, you have them in Israel, you have them in the EU, you have them in China, you have them in the US. So the people and the money have now spread around the world, and you actually now have limited partners in all these geographies at the same time. At the same time, you have innovation occurring at a rate around the world that you've never had before. Patent registrations in China now are at all-time highs and growing very fast. Patent registrations coming out of South America are at all-time highs. Patent registrations coming out of Israel are at all-time highs. So innovation is no longer the purview of only the United States companies, and I think that there's a serious implication for that long-term in terms of venture in the United States. And we'll get to that a little bit later. The people are also global. One of the things that Ira mentioned this morning is he said, well, the best people will still want to go to the United States. I'm not so sure. Because if you look at what makes someone excited, growth makes someone excited. There's a lot of places in the world where you're going to have more interesting growth in technology-oriented companies than they are in the United States for the next period of time. So the really smart kids in China that I know, the first thing they're doing when they're getting their graduate degree, whether it's in the UK, whether it's in the US, they're going back home. And they're going back home fast. The expats that are working for General Motors and the auto companies, they don't want to come back to the United States. They want to find, they're going to work for Chinese domestic companies. It never happened before. Never before did you have expats leave those exalted expat positions and take local jobs in those local companies, especially Chinese manufacturing companies. And that's now happening at an increasing rate. The third thing is, where are standards created in the world? The US used to have absolute hegemony in terms of establishing technical standards, yes, except in GSM in Europe with the cell phones. But in general, if a company left the United States and it was the dominant player in the US, it became the leader almost de facto in the world, and that was the standard that was largely adopted. Not a single US internet company is a leader in China in its category. Google's gotten crushed by Baidu, eBay got crushed by Taobao, Yahoo got crushed by Sina. You don't even have a console gaming business there. It's all online games with 6 companies over $1 billion in market cap. So what's happening is that the idea before that if you won here, you could be successful everywhere else, that has also ended. And so companies here need to become much more aware of what's happening around the world. And that has not been the case historically. That's not been a strong suit of the US entrepreneurs. It is a strong suit of most of the international guys because they've always had to look back here. So those are some changes that I think are pretty fundamental. The saddest statistic, if you're a limited partner in venture, is since 2001, $29 billion has been invested in Web 2.0 companies. $29 billion in that category. Not a single IPO. Not a single IPO. Skype was, you've had a couple good exits. Skype was invested in 98 actually, but you had a couple nice M&A transactions. Not a single IPO. When in history did you ever see $30 billion go into a category and not have a successful independent company come out of it? And so there's a whole lot of things structurally around venture in the US, and the rest of the world ultimately will change in the same dimension. But right now, the US is unfortunately leading with, I think, what are some severe fractures in the model that we used to follow here.
So that your last point is that the venture industry has been known for its lemming effect for a long time, right? Ooh, there's a hot, shiny area. Let's all go invest there. Do you think that VCs have learned their lesson from things like the Web 2.0 experience? Do you think this is just endemic to who we are? We're just lemmings by nature and we follow? I mean, do you all feel like lemmings up here?
I try to make it appear that there's a cliff that everyone should come jump off of in Hawaii, but...
I expect you to say, I didn't do any Web 2.0, I didn't do any Web 2.0.
We've got some, I've got a few 2.0 companies, but, I agree with much of what you said. I think it is different, and we're looking at different models. We're looking at different ways to get LPs liquidity more quickly than traditional models because they're tired. I think there's a bit of a generational shift going on. Some of the stalwarts of Silicon Valley The guys running that now are generation 2 or 3, really, who are doing the day-to-day operations. And you know, you get these cycles. Leadership cycles change, and I think we do have to be nimble. One of the things that we see in Hawaii, being a tiny place out in the middle of the Pacific, to go to one of your points, is that everyone is trying to solve the same problems all over the world now, and people are really smart. And in other countries, where the countries are more focused on helping their people get ahead, they're helping way more than our country may be helping us get ahead. And so one of the things I look at and working on with our portfolio companies and potential companies is, you know, how much time do you spend fundraising? 5, 6 months out of the year? It's ridiculous. Whereas, you know, if you're spending half your time fundraising and not growing your company, and some guy in Israel is working on the same problem and he's well-funded and all he's doing is building value in his company, you're at a disadvantage. So I think absolutely what we've done traditionally isn't going to work going forward as well if we want to maintain a leadership position. And we all have to think globally and probably invest globally to stay ahead. So,
yeah, it seems to me that the fact that it's become a global industry means there's more competition for U.S. venture capital firms and companies. That's not necessarily bad, right? So, Roger?
Coming from a small place like Australia, right? 21 million pop.
Big place with a small number of people.
Economy same as Southern California. It's about that. That sort of scales it. Marginally bigger than Hawaii, but not much. IPOs have never been an exit for us. But what's changed in the last 20 years that I've been involved with this, it used to be 65% of the global addressable market was North America. And it's now maybe 35, 40%.
Yep.
That's a big shift. So where do I travel? About 1/3 to Europe, 1/3 to Asia, 1/3 to North America. And all of our exits are trade sales. In some global firm, we've spent years and years building a valuable partnership. I think the change in the model to extent is that you have to accept that we are more an evergreen type business. The 10-year closed-end fund thing, I think, is an artifice which isn't concurrent with reality. You saw that first in medical technology, people building active pharmaceutical companies, which we don't do, because I think it's a 15-year hold. And it's getting longer, if anything.
How do your limited partners feel about a 15-year?
Well, the limited partners who back a couple of specialized managers there kind of know it. And they say, well, okay, we've got 10 years, but we know we're going to have to do extensions as long as you're going okay. And I think that's coming across all tech sectors as a reality, no matter what the formal structure is. So the partnership between really informed, sophisticated, long-term investors and the active managers is the thing which we've all got to work on, I think, because I don't think there's quite the education or the like-mindedness in terms of the job of the hand.
Let me ask, getting back to the lemming question, if we believe that being a lemming is not a good thing, and poor lemmings have a really bad reputation. I mean, we use them all the time. That tells me that rather than jumping on a bandwagon along with everyone else in investing, you should be looking for when is something going to hit an inflection point that you can get in early enough, not too early, but early enough to really do something innovative. And I'm wondering what you're all seeing out there in your portfolios now as what's hitting the inflection points now? Where are you seeing really interesting investments in what area?
So I would offer that maybe the smartest thing we did when we set up Qiming was insist on having 3 people who did nothing but healthcare. Because 3 years on, 3.5 years on now, the Chinese government has clearly made statements as to what it wants to do with healthcare. And not too many firms in China at the time really had any sector focus. And what you'll find is if you're going to do early stage, you need to know more about the subject than if you're doing late. If you're doing late stage, you have a balance sheet. If you're doing early stage, you have a whiteboard and maybe a sheet of paper with someone's idea. So what you're evaluating are the people, and the background of technology you have to have is quite more substantive than if you're doing a later stage investment. So I think for us, the healthcare side has been a hugely positive. I think one of the issues when we were talking about liquidity, the biggest challenge, and it hasn't been written about a lot yet, but you'll see it more in the next couple of years, the biggest challenge coming up for U.S. venture vis-a-vis China is that the Chinese are going to do everything they can to set it up so that it's attractive for local entrepreneurs to list those companies in China. So they've just launched something called the Shenzhen Growth Board, and that is a heart, or an arrow aimed right at the heart of NASDAQ. So that now a local entrepreneur in China has a very, very credible It's going to be well funded. It's going to be well covered. They're cherry picking. I mean, if you can make one investment in the next year, you want to figure out a way to get money in to the initial launch of that board, because they're cherry picking those companies and pricing them so that the returns are going to be spectacular. So it's absolutely, I mean, the first year is going to be a great win, I think, on that market. And there's a series of reasons why they're doing that. But just from the entrepreneur perspective, where we're sitting, that is a question every single person we talk to says, why would I go to NASDAQ? I can list in China. The listing requirements are roughly the same. The investment banks are all in, the analyst coverage, the float may be better. So the value of having the world's liquidity markets at home is something, again, I don't think we're really putting that in the calculation in some of the rules and regulations we're putting in place in what we're trying to encourage from an investment perspective.
I want to get back to that in a second. But
I'd like to address the lemming thing for a moment, though. You know, I would argue that you're only perceived as a bunch of lemmings when you spend $30 billion and there's no IPO. When you spend billions and billions and billions of dollars and there's a whole boatload of IPOs, you get called Kleiner Perkins, you get called Sequoia, you get, you know.
then you're smart.
Then you're smart because you all invested and created the internet or whatever the sector is. San Diego, first couple guys here in 82, 83, doing life science. And when I landed a couple of days ago, there was a big billboard in the airport that had all of the life science companies in this town. It's ridiculous. It's unbelievable. It's a giant industry. So, you know, I do think you need the lemming factor in a way to build mass in whatever industry there is for a chance to be success. You have to get the scale in that industry. And sometimes we all make a bad bet and then we get called lemmings. But if we make a good bet, we get called really smart venture capitalists and make lots of money. To your question, you know, in Hawaii and very much early stage, you know, we have to be generalists. We have to try and be really smart in multiple areas, which is difficult. You know, life science and clean, you know, renewable energy, clean tech, and Web 2.0 are very disparate subjects. And I think what we see right now for America and the world, for a lot of reasons, clean tech, renewable energy is starting to move again. You know, there's a huge push from Washington. Some of that money is starting to come in. Once the project finance opens up in that sector, I think we'll see some real movement, real improvement. It's happening all over the world. Oil's back up 62, 63 bucks. You know, I think that's an area that's going to continue to see tremendous growth as we go forward. Healthcare, obviously, for all the reasons of baby boomers and everything else. I mean, if you invent something that, there's a guy out here who's got a great idea he's got something that'll kill the flu virus in your nose, you know, and keep you healthy. There's a couple $1 billion proposition. So things like that, I think, will continue to be good.
Yeah.
All right. From a European's perspective, I think we've got a number of things to fight with that are different than the United States. And I might digress a little bit, and I can't comment on China, but you seem to be or Asia as a whole, very convinced that companies there, besides the regulatory setting and the force of the government behind them, pushing and developing very quickly, and offering an environment in which things can flourish very fast. I wonder, and I don't know, it's just a question, I hope I may ask this, if there's also the culture among the population for fast and rapid adoption of new technologies, et cetera, et cetera. For a European, when you come to the United States, you get the feeling that things that are maybe you'd consider when you look at it initially totally flippant get adopted by millions of people overnight, right? It's like, wow. This is crazy. How are they ever going to make money off Twitter, right? It's like, yeah.
We're still wondering, by the way.
Well, I know, yeah, but I mean, that's the sort of feeling you
We
get.
make it up in volume.
Well, maybe, right? But
Billions of tweets.
But lose money on every tweet. But
I would have thought that while maybe the focus is shifting, that there is a cultural advantage in the United States due to this. You know, the people are prepared to just try things out a lot quicker than, say, people in Germany, who tend to be rather reserved, or in most of Europe, the not Anglo-Saxon speaking. I sort of digressed a bit, but
Certainly in China, you see things adopted faster than I've ever seen them in the U.S. I mean, it's extraordinary.
Oh, wow.
Let's. We're almost out of time. Let me see if there's any question, one or two from the audience. If anyone has anything, this is your chance to ask a VC a question,
how do I give Mike money?
or make a statement, or make a complaint.
Boo us off the stage.
Yeah, Scott Gardner. I just want to make an observation, looking at you guys and hearing where you're doing your investments. There's nobody on the panel from Silicon Valley. What does that say about the
From where?
from Sand Hill Road? I mean, there's no.
They closed about.
That's
3
what
years
That's
ago.
my question. Is
Well, I think the panel, I think the panel was set up to be global venture investing, but that's a good point. I represent the west coast of the U.S., but I'm the panelist, the interviewer. I can't say anything, but so.
Well, what's your perspective? You haven't.
You should say.
Well, you know, we are seeing a lot of excitement in both biotechnology and clean tech right now, and they both feel like they're hitting an inflection point, as the internet did 15 years ago that we all participated in. But we're being very selective, and we're trying not to be lemmings and trying to really be careful. You know, and you find deals with good capital efficiency where they really have something that could be a breakthrough. Anyway, I think the red light flashing, I think, means our time is up. So I would like to thank the panel very much for your comments.